Hey, welcome back. It's Jason Walter here. There's some concerning news regarding our housing market in the US because today it was reported that refinance demand plunged 43% from 1 year ago. And on top of this, mortgage applications for home purchases have also decelerated as well, as higher interest rates may be having an impact on our real estate market today. In today's housing market update, I'm going to be sharing all the details with you, including an update regarding mortgage loan forbearance at the end of this video. Let's dive into the video because I have a lot to share with you today, and this video took hours to make with all the research involved, so please hit the like button. I greatly appreciate that, and let's go ahead and dive into the video. The Mortgage Bankers Association, or the MBA, reported today that the Refinance Index, which is based on mortgage applications for refis, decreased 5% from the previous week, but it dropped a whopping 43% compared to 1 year ago for the week of March 5th, 2021. So why is this significant? And the answer is this is the first year-over-year drop since March 8th, 2019. And what a drop it was. Let's take a step back and examine why refis have dropped on a year-over-year basis. About a year ago, mortgage rates fell drastically as fears of this pandemic spread into our economy. This caused a spike of refinances about a year ago. And in response to fears of an economic slowdown or meltdown last year, the Fed decreased the federal funds rate 50 basis points or 0.5% on March 3rd, 2020. And because the federal funds rate is tied loosely to mortgage interest rates, this caused mortgage rates to drop as well. Okay, so going back to this report from the MBA, Joel Kahn, who's an associate vice president for the MBA, stated the following. He said, the 30-year fixed rate mortgage rate climbed to 3.26% last week, which is the highest since last July, and up 40 basis points since the start of 2021. Signs of faster economic growth, an improving job market, and increased vaccine distribution are pushing rates higher. The run-up in mortgage rates continues to cool demand for refinance applications, and activity declined last week for the fourth time in the last 5 weeks. In contrast, their unadjusted purchase index, which is based on mortgage applications for home purchases, increased 9% compared to the previous week. However, it only increased 2% compared to the same week 1 year ago. At first glance, this sounds great, right? So mortgage applications for home purchases increased compared to 1 week ago, as well as 1 year ago. However, because I'm a data nerd and I follow these numbers on a weekly basis and report them to you, I noticed that the MBA's purchase index has been slowing, just as I reported last week. For example, 1 month ago in February, their purchase index was 17% higher than the same week 1 year ago. And 1 month before that in January, it was 10% higher than the same week 1 year ago. And in early December last year, the MBA reported that their purchase index increased 22% from the same week 1 year ago. In other words, in about 3 months, it went from a 22% year-over-year gain to now only a 2% gain. In my opinion, the main 2 reasons why this may have happened is because of rising interest rates as well as record low inventory. For example, take a look at mortgage interest rates so far this year. Rates bottomed out with an all-time low of about 2.65% on January 7th, but they have increased 6 out of the last 8 weeks this year. So will interest rates continue to increase, and if they do, by how much, and how will that affect our housing market? In order to get a glimpse into the future, I would recommend not to look at home sales and home prices because that's really a metric of what happened 1 to 2 months ago, right? You list a house and then the house ultimately sells 1 to 2 months later. So home sales and home prices is really a reflection of the past 2 months. Instead, I highly recommend we look at mortgage application numbers as well as pending home sales because that's going to give us an accurate picture of what's going on with the real estate market today so we can have a glimpse into the future 1 to 2 months from now. So we've already talked about mortgage application numbers. Let's talk about pending home sales. We won't have pending home sale numbers for February from the National Association of Realtors until the end of this month. But I'll be sure to make a video about that in a couple weeks here, so be sure to subscribe if you haven't done so already. However, I did some research for you and I found that Redfin has reported housing market stats for 400 U.S. metro areas during the 4-week period ending February 21st. They announced that pending home sales were up 18% year over year. During the single week ending February 21st, pending sales were down 9% from the 2 weeks prior. It's likely that last week's massive winter storm impacted housing market activity in many parts of the country. So it's a little bit too early to tell how these rising interest rates are going to be affecting our housing market, but time will tell. Meanwhile, Redfin reported that the asking prices of new listings hit an all-time record high of $343,961, and that's up from 11% from the same time a year ago. Now keep in mind, these are asking prices and not sold prices. In addition, this is for 400 US metros, not the average asking price across the country. In other words, metro areas obviously tend to have higher home prices than other parts of the country. Redfin also reports some bad news for homebuyers out there because they reported that new listings of homes for sale were down 17% from a year ago. And active listings, or the number of houses listed for sale, fell 40% from 2020 to a new all-time low. I know many of you, including myself, are really hoping that housing inventory increases this year to have a more balanced real estate market so it's not such a strong seller's market. However, we're not seeing an increase of housing inventory just yet. In the meantime, due to historically low interest rates and also record low inventory, houses in the US are selling quickly as well. Redfin announced that 55% of homes that went under contract had an accepted offer within the first 2 weeks on the market, well above the 44% rate during the same period a year ago. This is another new all-time high for this measure since at least 2012. In addition, 43% of homes that went under contract had an accepted offer within 1 week of hitting the market. This is also an all-time high for this measure. In Sacramento, where I live and work as a real estate agent, our median days on the market right now is 7 days. 1 year ago, it was 17 days, so a 58% reduction. Meanwhile, in Sacramento, our home prices increased about 19% compared to a year ago, even though we have half as many houses available for sale. Okay, changing gears slightly, let me give you an update regarding mortgage loan forbearance numbers, because the number of homeowners in forbearance decreased by 22,000 last week. However, that rate has continued to slow. Currently, about 2.7 million loans are in forbearance, and that equates to 5.1% for the share of loans in forbearance. But as you can see on this graphic, the number of active forbearance plans has been fairly flat ever since November last year. This is not a huge surprise to me as of late because recently the length of time that homeowners can do a forbearance has recently been extended. To give you a very quick background regarding this, if you have a financial hardship due to COVID-19 and you have a federally backed mortgage, then you can contact your loan servicer, which is the company you pay your mortgage to, and request a mortgage loan forbearance up to 1 year. This would allow you to stop paying your mortgage for up to 12 months. However, if you have a mortgage backed by Fannie Mae or Freddie Mac, you now can request a 3-month extension up to a maximum of 15 months of total forbearance. But to qualify, you must have received an initial forbearance on or before February 28th, 2021. In contrast, if you have a mortgage that's backed by HUD or FHA, USDA, or VA, you may request up to 2 additional 3-month extensions for up to a maximum of 18 months of total forbearance. But to qualify, you must have started a forbearance plan on or before June 30th, 2020. In addition, not all borrowers will qualify for this maximum, so definitely contact your loan servicer for options. If you enjoyed watching this video, please hit the like button. I greatly appreciate that. And also consider subscribing. I post videos about how this pandemic is affecting our housing market, and I really enjoy making these videos for you. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.